Hey, folks, welcome to verifiedinvesting.com. My name is Gareth Soloway here with a deep dive on gold and silver based purely on technical analysis. Again, I'm the chief market strategist here at verifiedinvesting.com. And as always, at verifiedinvesting.com, it's no BS, just charts and probabilities. So let's dive into the chart on gold. Let's see what the projections are telling us and the charts are telling us. So what we've seen here, this is the daily chart of gold, right? So we've had this nice move up yesterday. We're starting to creep up a little bit more today. The first thing that strikes me when I'm looking at this is take a look at this big down move here on the daily that we had on October 21st, and then look at the 1, 2, 3 bar side consolidation. And so to me, that pretty much screams there's resistance here. So this is going to be a near term big level in gold, right? So you can see right here is we can ultimately notice the sideways chop and then the breakdown. And now we're back into that sideways chop. In technical analysis, that means that's a key level to watch. If we can break above this on a daily closing basis, right? So if we can close above the highest point of that chop, let's say 41.65, the next move up in the near term would take us into these base points. Notice how they're both equal right there. This was the close one day and then the open the next day here on gold, and that would be at 42.50. If that gets taken out, you retest your all-time highs. All right. So there's a stepping stone, essentially stairway up towards getting back to all-time highs. Now, one of the things that I'm looking at here in the 1979-1980 period is what is going on in gold now and how it relates back then, because that was the last time we had a monster move that was almost a perfect replica of what we're seeing now. So let's do that. Let's dive into the chart on gold. We're going to look at the current chart here in 2025 and the 1979 bull market run. So look at the similarities. For those of you that are new, you may not have seen this, but you can see in 1979 we had this great move up. We had this consolidation phase. In 2025, great move up, consolidation phase. And then what's the most fascinating thing about this move is that following in 1979, the consolidation phase, we had 9 straight up weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, right? So 9 up weeks in a row all the way up here. And from that point, we had the beginnings of our correction in early 1980, a big reversal in gold. Now, over here in 2025, look at this. We had the same up move consolidation. 1, 2, 3, 4, 5, 6, 7, 8, 9 up weeks in a row. And this is the weekly chart of gold in 2025. This is the weekly chart in 1979. Then following that, we had a pullback or correction. Notice how in 1979, it was one huge weekly candle down. In 2025, it was 2 candles that essentially equal a one big candle move down, right? A big move down or reversal of that previous green, right? Here you have the previous green being negated. Here you have the previous green in 2 candles being negated. Now, what's fascinating here is to look at the progression, right? So if we look at this, right, in 1979, following that big down move, we started to get up weeks, right? We got a bounce here and another bounce here. And what we can see is we're kind of getting the same thing in that respect, right? So we're starting to move back up. Now, what's interesting in 1979, we ended up getting, after a few weeks up, we ended up getting another wave of selling to the downside, right? And so essentially what we're following here is this week, maybe a little upside next week, but then does it start to replicate this 1979 move to the downside? Now, to be crystal clear, because a lot of people out there are like, oh, well, this isn't the same as 1979. I 100% agree with you, right? In terms of the fundamentals of what is going on in the economy. Now, in 1979, if we flip back to this chart, what we can see is after this high in 1979, we literally went into a massive bear market. I mean, to a point where if we keep zooming out, I mean, you literally go all the way, right? I mean, you have to go massively until here, right? So it took until 2007 to 2008 for us to take out that 1979 high. Okay, so literally we're talking 27 years of downside. Okay, now from my analysis based on the fundamental shift here, okay, and we're bringing it back to kind of where we were looking. My fundamental analysis is telling me that because of the differences, mainly you have a Fed that is lowering rates now. In 1980, we had Volcker raising rates to 15, 17, 18%. You have obviously the US debt to GDP now at 130%. Back in 1980, it was 30% debt to GDP. I mean, these are monstrously different periods, right? The liquidity in the system, the fiat currency issues, all of those, de-dollarization you could talk about as well. Those are major distinctive differences than 1980, right? And so because of that, what I'm projecting out here is that we're still going to have a correction lower on the chart of gold. Max move down, though, is only back to, get this, guys, only back to 35 to 3,600. Okay, that would be your max downside. Now, listen, I could be wrong. Maybe it goes lower, but that would be my max based on all the analysis and the number crunching I've been doing and the studying of charts and the fundamental factors. That's really what I'm looking at as a backdrop. And we should only stay at those lows for, let's say, a few months before we start to climb back up. And I think in 2026, we go to $5,000+ an ounce. And so much different, right? Here in 1979, 1980, it took 27 years for gold to take out those highs. Here I'm saying because of the fundamental differences, it's likely only going to take at most 6 months to a year to take out those recent highs. Big differences there. Okay. So again, these are the things that we have to monitor. And again, look at what we're seeing here. So we're seeing the big reversal in 79 going into 80, right? And then we have a bounce and then the next wave down. And this is where I'm getting my downside target from. So notice the initial pullback. This is the emotional period, right? And so we have to understand is that when you get to major peaks and valleys on charts, doesn't matter what chart it is. It could be a stock chart, crypto chart, or commodity chart. In this case, gold, is that emotion is still king, meaning that people react the most emotionally. I think we all would agree with this at major highs and major lows. Major greed, FOMO, major fear, FUD, as they call it, right? And so the initial move is the one that's going to be most like past moves, even if the fundamental side is different. Okay, what do I mean by that? Well, here is your initial move down, and then we start getting in this bounce period, and then we go lower. And you guys, I showed you, I zoomed out on the chart, right? I mean, this is all the same kind of nonsense going on. This is where there's less and less emotion involved because we're getting into a period where it's now retraced, and people are kind of getting lackadaisical about gold. But this part, this is the emotional move. Now, the reason I'm bringing that to your attention is that on gold, we noticed that we had a pullback from peak to trough before it kind of stabilized and got a bounce. If we look at this, what do we see? We see that the former move up high before the consolidation and the breakout now becomes support. And that's really over here what I'm getting at in terms of where I see the pullback going. So we're looking at a zone from this high here of this move up to essentially just a little bit above because it got kind of just close, right? And there's your 36 to 3,500 marker. And that to me would be my level where I start accumulating pretty aggressively on gold. All right. Now, listen, what would change the mantra here? Well, if we ever take out the second we break above here, then that's off the table because that's not a replication of the 1979 chart. So a good technician that bases their analysis on probability versus emotion, which is what most people do, they always have to look at both sides, right? You have to look at, okay, this is the side that's most likely to occur. So probability in my case, I believe is 70% chance that this is going to play out back down to this level before next year we go to new all-time highs on gold. But in reality, I have to say, well, what if the 30% chance, which is the lower probability, plays out? Well, how do I know? Well, the second it deviates, meaning we take out the all-time high of 2025, it has now proven to me that it is no longer like that case from 1979. All right. So again, a good technician knows when it's in play because it's the probability is favoring it versus out of play, meaning when it fails, essentially. All right, let's go to silver, guys. So silver is a beautiful chart here, guys. This is a chart that, again, I nailed the top on. We in smart money commodities, we nailed this here. Again, here was your high in 2011. Here's your '08 financial crisis low, bull market high, COVID low, and then again, while people were out there calling $100 silver, I said, all right, guys, I still think it's going higher, but you're going to get a pullback here, and that's what we've gotten, right? We've gotten a big, big pullback. Now, if we zoom in here and we go to our daily chart on silver, we're getting that same move up in gold. Look at this. So here, by the way, you can see on this chart, we had that same bar consolidation as on gold. It broke down, and then we made our way back up. It got rejected, but then it broke to the upside. Okay. So again, just something to keep an eye on gold, silver here, right? So it has broken above, which means it's looking at that next zone here. And the next zone is twofold, right? There's a little bit of resistance right here up to here. Do you guys see why I'm choosing those levels, right? Because here's your flat bottom right there. And actually it goes back to these highs here. And then you have this flat bottom right there. And so short term, silver and just today alone, 51.43 to 51.80. That's going to be resistance. Now, if it gets back there, it could test this high here. Now, the difference maker is we don't have the similar kind of tactics here of going back to the 1980s with silver. It doesn't match up quite as well, which means it's not as likely to follow that same trend. So there is a possibility we could double tap this parallel, which again is that bigger parallel here. If we zoom out, this is the bigger parallel right here on silver. Now, I still think silver is going to continue to pull back at some point, but if we break above this parallel on a weekly close, let's say, it could be off to the races to my next target of $60, $62 per ounce on silver. All right. So again, we'll watch this very closely. I'm still in the camp. We still need to pull back. I'll show you my general target is a retrace. By the way, notice how you don't really have that same move in silver, right? So in gold, we had the move up, the sideways consolidation, and then the parabolic move. You don't really have that here, right? It's more like up, chop, 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 up, chop, 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 and then parabolic move there. So it's a little bit different on the silver front, which again makes it a little harder to use analysis per replicating exactly what happened in a past cycle. Now, you could go back to 2011, but even 2011, the bull market in silver wasn't identical. My guess is silver is more prone to short squeezes, and I think you guys would all agree with that. And so it has a little bit more of a fast move and then a big pullback and then a big fast move and kind of thing as the shorts get squeezed in silver. But suffice it to say, if we look at this chart, I'm still eyeing a retrace to about the $43 level here. What we can see here is you take this low from April, which was that was the tariff, sell-off low, to this low right here, and we get around $43. And so if we pull back into that, that would be a good amount of support. There's also a gap fill. Do you guys see this? All right, so this was a Friday close on silver. It's very rare to get gaps in the metals because they usually trade, at least big gaps, right? Unless it's a Friday to Sunday open. But right here, you have a pretty big gap. And what's interesting about this is that it basically coincides with this pivot top right there. And so essentially, as a technician, what I'm saying to myself is, okay, I'll nibble here on silver if it pulls back to 43. Obviously, if it breaks the all-time highs and closes above here, it's off to the races. And then it's to $62, right? 60, 62. But if it does pull back, then I'm going to look to accumulate a little at 43, Pierce. And then I'll add at 39, basically 39.60, a $40 Pierce right there. But this would be the level where I would start to pretty heavily accumulate silver on the long side. Now, just to be crystal clear, guys, as I end this video, I still am holding my long-term gold holdings, right? My metal holdings, because I am a long-term bull on gold, but I'm also a chartist. And a chartist is always the number one thing. I always have to go when I'm looking at near-term moves with probability. Probability is king. All right, because again, that's going to give me the shorter term moves where I can swing trade my positions in the near term, make money, and still hold my long-term holdings in the metals, in the precious metals, for a bigger move to the upside, which I still think is coming, even in gold after this meteoric move. All right. Thank you guys so much for tuning in to this latest gold and silver update. Like I always say, if you like this, please share it with your friends and family if you think they would like this type of analysis versus people just spouting out random targets. Everything I do is based on calculations and charting and probability. And that's the name of the game for true technical investors. Have a good one, guys. Take care.